It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already June 1st, Monday evening, June 1st, 2015. We got a jam-packed newsletter in store for you guys and gals. Kicking off a new week, kicking off a new month. If this is supposed to be the summertime, it ain't looking like it right now in the price action. Had a fantastic day today. Hope you guys had a great Monday as well. Hope you had a great weekend. Before we jump in today's charts, I do want to remind you I teach everything we're going to cover here today to all of our students here at School of Trade. Check out schoolofttrade.com. Got a free trial right on the homepage there. You can register, and I'll shoot you out a free pass. Come out attend our trade room. Also, make sure you're watching this video on our trading blog at sidewaysmarkets.com. Why, you ask? Well, I'm glad you asked. There are three reasons why. Try to have some fun with you guys and gals. There are three reasons why you should be watching this video over on our trading blog. One, I got a free pass for everyone out there who's not a member of schooloftrade.com and would like to see what all the commotion's about. What's everybody talking about? Grab a free pass to our live trade room if you're not a member of School of Trade and you'd like a free pass, upper left-hand corner. We have a nightly newsletter mailing list. Lower left-hand corner, all I need is your name and your email address. You can join our nightly newsletter mailing list. That way you never have to worry about missing another newsletter ever again. And the last thing here, very important, you can download all the charts I'm going to cover tonight by following that link. Yeah, see that one right there where it says click here to download today's charts? That's the link, and that'll take you over to our SlideShare page, and you can download and use those charts at your leisure. Everything I'm going to cover tonight, you can download right below that video. So make sure you download today's charts. Make sure you grab your free pass and make sure you register for our nightly newsletter mailing list. If you register for the mailing list or you grab your free pass, I'm going to send you a verification email. So make sure you check your inbox, your outbox, spam folders, junk folders, whatever folders you got over there. I'm going to send you a verification email. So make sure you find it. Once again, wrapping up, or should I say kickstarting a brand new week, new month. And what better way to do it than with some funny yellow metal, the gold futures. The GC, gold, don't forget, we're trading the 815 contract right now on gold. If you didn't roll over last week, make sure you roll over this week. 815 is the contract, GC is the symbol. Gold is bearish, coming off resistance after breaking the bear channel highs, now heading towards those, what we call the retest lows, the range lows down here at 80.4. So we know the sellers have a definite target to get back down to these range lows at 80.4 right now. Our plan is to look for selling opportunities at resistance levels and use the support levels below for profit targets. So of course, we were looking at this channel, if you recall from last week, that told us to keep selling. Got a great opportunity here. Early evening, late Sunday evening. If you missed it, I don't blame you. I missed it too. I was catching some Z's here. But just awesome tradable opportunities as this price cooked all the way higher. And if you were looking for a way to sell it, it was an easy ABCD correction off that high. That's a beautiful way in a downtrend. You know you're looking to get short, right? So just project up that ABCD overhead, and you know there's going to be resistance there. So what would I be looking for there? I'm looking for, remember those three things? How do you get short? There are three ways to get short. Reversal pattern, a failed buyer pattern, right? Which is my favorite, failed buyer pattern. So what you're doing is you're waiting for these bulls to try up here and fail. You already know you've got the ABCD correction back overhead. So you know it's destined to want to come lower. You just have to wait either for the reversal pattern, the failed buyer pattern, or wait for the wave patterns after it makes that turn. So there's no doubt about it. This market is bearish right now. Honestly, I think the easy money selling came much earlier today, right? The easier money selling here came right about middle of the morning here in the U.S. So if you're a bear, as I said last week, be waiting for these prices to get up there so you can keep selling it back down. And what a great example of that today. Now our plan continues to be the same, but again, now you're going to be a little patient. Now we want to wait here on gold. We want to wait to see this price go up a little bit higher so we can get into those nice, tasty selling opportunities coming back down. For your targets waiting for you below, keep in mind you got a trend line down here. We are seeing a bit of a wedge here, and you know this goes hand in hand with what I said earlier. You really just want to make sure when you see this wedge, no matter how, or triangle, right, potato, whatever you want to call it. It's a triangle, it's a wedge. Just be careful right in the middle here, right? Be careful right in the middle. Remember, you're going to have buyers buying the lows, sellers selling the highs. We just don't want to get wrapped up right in the middle, right? This area around, say, 92, 93 area. I really, on the gold right now, to get the easy money, I'm looking for price to go up so I can sell it back down. Go up so I can sell it back down. And then again, you've got targets at trend line, targets at trigger zones. And then my ultimate target for you bears out there is going to be that 80.4. Once we get down to 80.4, then the measured move comes in. And that puts us right about 70.6 if my eyes are still, I've been eating my carrots lately, so. Yeah, see, there you go. That's a measured move support down there, 70.6. This is gold we're talking about. This ain't the S&P, right? This thing can really move, as you can see. So 70.6 would be a measured move target down bottom. So I would say right now, targets at the range low, right? I'm sorry, trend line support, trigger zone support, range low support, measured move support, and all you're doing right now is finding areas of resistance and looking for one of those three patterns: reversal pattern, failed buyer pattern. Yes, failed buyer pattern at resistance, or wait for price to make the turn, and then you're obviously selling here on the way down, selling those retracements on the way down. Relatively easy job in front of us here on gold. The hard part, as I said earlier, is just going to be staying patient right now. You really got to wait for these buyers to get this price up off these lows. I would highly discourage selling this chart right now just because of where we are right now, right? I would highly discourage really anything right now on gold except for selling up those highs. Let's keep going. Moving from that funny yellow metal over here to the Euro futures, the 6E. Not to be confused with the Euro-USD pair. I trade futures for many reasons compared to Forex. If you need more information on that, right, just Google search or search on my blog for Forex versus futures, and you'll see a recent blog post we did. Or shoot me an email, jj@schooloftrade.com. A lot of reasons why I choose to trade the currency futures. Fully regulated, great tax benefits, and of course, much cheaper. I pay $5 commission, less than $5 commission, whereas if I traded the pair, it would cost me 3 pips, and that's going to be $30. See, not many people do the math on that, and they don't really understand. You're spending between $30 and $50 if it's $10 per pip, right? Standard lot. You're spending all that money to get into a trade. It may not be charged up front, but it's charged once you get out of that trade in the form of a loss, right? By that spread. So, bottom line is, I choose a 6E, the currency future. Regulations, it's a good business decision, not a very efficient market to be trading Forex, but I could go on all day long. Not enough time for this video, though. Euro, what's happening here? Euro is bearish, coming off the highs of the bear channel, and our plan is to keep looking, very similar to gold, keep looking for selling opportunities at resistance levels overhead while using support levels below for profit targets, right? This is really not a lot new here. Now, if you were with me last week, right? Of course you were with me last week, right? We were all here, same time, same place. We had an A, B, C, D. Remember this from last week? Remember my exact words last week in the newsletter? Be very patient, A, B, C, D, and be ready to sell that high. Well, now we're getting paid for our patience. It's one of the only, photography would be another example of a great industry where you get paid for patience, right? So we get paid to wait here as traders, and if you waited this one out, you're definitely being rewarded right now on the euro. So we're getting a nice sell off this low, off the high, right, that channel high. And just like for gold, we've got some definite, it's an easy plan, right? I'm looking for selling opportunities at resistance areas overhead. I'm looking for selling opportunities at resistance areas overhead, and I'm also going to use levels of support below me to look for profit targets. So we go A, B, C, D. I get a measured move down here. What's that? 0869, right? Call it 0870 if you want to round it up. And of course, we got measured move target. I've got trigger zone target. The ultimate target right now for you bears on the euro is going to be the 0826 area, that range low. Remember, we know that low, that's the line in the sand. The buyers took it higher. We know where those sellers are trying to get it lower. And then this is the euro we're talking about. It's not like gold. It's not going to move as volatile as gold will. But here would be your measured move now, obviously. If we did just, I don't see it happening tomorrow on the euro. The euro is a very liquid market, just like the S&P. So it's probably not going to run like the gold may be. But you can kind of see where that measured move puts us now, all the way down here. What is that at the 0622, something like that, measured move support. So definitely be on the lookout for selling opportunities at resistance. Remember, in a downtrend, at areas of resistance, what are those three opportunities we have? Reversal pattern, failed buying pattern, or wait for the turn and then sell those rips on the way down. Just make sure you don't sell directly into support. Another example here on the euro, I'll tell you, the easy money was made earlier today. Now you got to stay patient for this for tomorrow. So whoever was listening to my newsletter last week and had all their guns loaded with ammo today, you guys got paid here on the euro and the gold. Now, if you're getting at it late, you got to stay patient here. Be very careful being a seller right now. You want to wait for price to get up towards those resistance areas, right? Draw a little trend line down overhead. I should have put that one on there too. A little trend line there. So, looking for those resistance areas. And don't forget, guys, you're not alone out there in your career. Come out and see me anytime you want in the trade room. We'll walk you right through what we're seeing here as far as where we be looking for real-time resistance levels on the way lower. But definitely want to be a bear right now. If you need help with real-time resistance here on the euro, you know where to reach me. I'm always at my desk Monday through Friday. How about the S&P? How about the S&P? S&P is bullish, but trading sideways in the short term. Our plan is to continue looking for buying opportunities at support levels and take our profit at resistance levels overhead. Remember, just like we said on gold, stay away from the middle. Don't fiddle with that middle right now. You can see we have really, in my opinion, we've got two really big clues right now. The first clue, of course, is this channel, right? The channel's pretty obvious. And what you'll always hear me say is that if you're ever wondering about your channel, just look at the midline. The midline will usually tell me if I have the right channel. This one lines up pretty darn well. Excuse me. If you see the midline lining up well, you've probably got the right channel. I've got 4 total tests, 2 on each side, 45-degree angle. Yeah, it's a good-looking channel, right? It's a good-looking channel. So we know we have the bull channel. We know we also have number 2 here. We have this little sideways, you can call it a wedge, you can call it a triangle, right? Really, if you look a little bit wider at it, it's also a sideways range. I don't want to put too much stuff on you. It's not really going to change much of how we trade this anyways, whether you want to call this a range or a triangle. But the bottom line is that we know that there is sideways movement going on right now. That sideways movement that's going on is a bullish bias right now. So we're going to continue to look for buying opportunities at support levels, and we're going to continue to use targets at resistance levels overhead. Now remember, we officially have a break of that channel right there. If you're a member here with me at School of Trade, you know that means now these buyers, you poking the bee's nest now by breaking that channel low, and now we're going to be shooting for that long-term target up at 33s. Now, again, that's a pretty hefty run for the good old ES tomorrow, right? S&P is not going to run like gold or crude oil. It's going to move more like the euro. So to get from 10 to 33s tomorrow, you know what? It's going to be a little more than 22 handles. That's a pretty hefty day on the ES. So we'll definitely be looking for those buyers to succeed there. Maybe it happens tomorrow. More likely it happens later on this week. But again, right in the middle though, this is really a difficult area to be trading. I mean, you're right in the middle of that range right now. So in my opinion, you really want to stay patient as price goes lower. buy those levels of support below. If it blows right through them, look to buy there, right? And remember, 3 ways as it goes lower. I'm looking for the reversal pattern at support. I'm looking for a failed selling pattern at support. I'm looking for it to make the turn as it pushes higher. Then I'm buying those dips. I'm buying the pullbacks as we go higher here. If you really want the best tradable opportunities, you'll be looking at the extremes here, right? Looking at the extremes. So as we go all the way down to those lows, looking to buy that 90, we'll call it 97 here, right? So that would really be where you're likely to get the best opportunity here to be a bull right now, when it goes right to the extreme low of that range. And then, of course, again, your target will be back up at the higher end of that range. So really right now, in my opinion, we get a bullish market, long-term bullish, short-term sideways. Look to buy those lows, take your profit at the highs. And again, my favorite way to trade those lows is to look for those sellers to try once, twice, fail. And usually when those sellers try a second time and they fail, that's usually when they say, heck with it. If you can't beat them, join them, and they'll jump in on the bull side as well. So literally you're buying into the stop losses of those sellers at those lows. We trade this market every day in our chat room. Don't forget, come out and see us tomorrow for real-time support and resistance here on the S&P. So again, bullish, trading sideways. Our plan is to continue looking for those buying opportunities at those lows. Just stay away from the middle. Don't fiddle with the middle of that range. Keep in mind, you can download all these charts below the video for tomorrow. All right, how about the crude? Wrapping up here on the crude oil futures. We get a double chart here. I got 2 charts here for you on crude because there's a lot going on. Well, not a lot going on, but there's a lot of very interesting stuffs here right now on this crude oil market. What are we seeing here right now? Fun day today. Today was a pretty fun day today. Crude oil is bearish with an overshoot at the range lows. Yep, I'm looking at you, kid. Overshoot at the range lows. Yep, got it. And now it's rotating back to these highs. Now, I talk about this quite often. When I see the market, in this case, overshooting the low of this channel, the first thing that comes to my mind is I'm playing poker, and the guy or gal across from me has all their chips in the middle. The only way for them to get money to put back in is to take some chips out, right? So when I see an overshoot, no matter whether it's a bull or a bear overshoot, in this case it's a bear overshoot, I immediately envision that poker game where the sellers have all their chips in the middle. How are they going to push this price lower now? They've got to take their profit and then try to keep selling. Well, when they take that profit, price is going to go higher. Combine that with some greedy buyers, right? They're not that greedy. They're smart buyers. They know overshoots are great bargains, right? So it's relatively aggressive, right? You're buying in a downtrend, but a decent, relatively high percentage opportunity. What I always do is when I see an overshoot of the channel low, I don't necessarily buy the low because it's buying against the trend. What I'll do is I'll wait for example, the sellers to try, and if they fail, I'll buy into their stops, right? Because it usually slingshots your trade right into my first target, removes the risk, and then it allows me to hold the runner. It's just an easier way to get that wham off those lows, right? So if you're looking to buy those lows of a bear channel, wait for the sellers to fail, or do whatever you want, but that's the way that I like to do it. It's a little bit easier that way because you get the money out of the market a lot faster when the sellers, who are just uneducated on how an overshoot works, they're trying to keep selling that low, and it's not going to be very easy because, again, the only way those sellers push this thing lower is if other time frame traders come in, right? A daily chart trader comes in, which is it's going to be relatively rare, or they take their profit and then go back in again. But again, it doesn't happen very often. Usually that overshoot is going to result in an overcorrect. So we now have our eyes on this area up over here. It's around 62s. We definitely have our eyes. Also, the fact that we didn't just collapse off this high today definitely gives me more ammunition to think that this is going to be pushing higher here for tomorrow. Let's keep going though, okay? So we get an overshoot, and we understand that overshoot means they're overcommitted, all the chips are in the middle, and we should most likely see that price try to run to an overshoot resistance area and overcorrection back overhead. That's what we're expecting here. Now, we still have a bearish trend. So I'm definitely going to be looking for selling opportunities along the way here. Our plan is to look for the best selling opportunities around the channel highs and, of course, around the overshoot resistance. Now, I'm going to pull a Yellen right now and say that that overshoot resistance is data dependent, unquote. What that means is it all depends on when we get up there. If we break the channel here, it's going to be a slightly different overshoot than if we break the channel here. It all depends on when we push through that channel high. If you're a member of mine, you know exactly what I'm talking about, right? So, bottom line is overshoot's coming. I can't really tell you exactly where it's going to be. If it broke out right now, though, that's where I expect it to be right now. If it breaks out later on this week, it'll be a little bit higher. Come in and see me tomorrow for real-time information on that, okay? So, we know we get an overshoot. We know we're going to get the best opportunities up at that range high, up around, again, right now, my number is 61.90. Tomorrow might be a little bit lower than that. So keep in touch with me tomorrow in the trade room, okay? So we know we have the 61.90, also looking for short-term opportunities to sell at resistance levels or catch the buyers failing. So basically, my plan right now on crude oil, I'm not a bull, I'm a bear. So what I'm doing is I'm looking for areas where the buyers try and fail, right? Where the buyers try and fail. I'll obviously load up with more if I can get it up around this area, right? Or whatever that overshoot ends up being. But that's the way you play this game right now. How do we sell in a downtrend when the short-term trend is going higher, right? It's very obvious we're in a long-term bearish trend. So how do I get short? Because if I could wait for price to collapse here and then sell the rips on down, but you're going to be getting into it a little bit late. The best way to do it is wait for the buyers to try and fail. Wait for the buyers to try and fail. Wait for the buyers to try to buy support. Understand where their stop losses are going to be and wait for the trigger into their stop losses. You're selling short into basically a sell stop. It's going to help your first target filled lickety split, and then you can hold on to the runner without any risk in the trade, right? So very, very easy, and we do this in a very short-term time frame every day in our trade room. So that's the plan, but let's take a look though, because we also see we have a trading range right here, and I think you're going to get probably the best tradable opportunities tomorrow. Let's go zoom into this area right here, okay? But you know the bigger picture, okay? You know what we're expecting. So I'm not going to get any pitchforks and hate email if price goes up to that overshoot, right? I'm not going to get those emails saying, see, you said you were a bear. And I'm telling you right now, it's most likely going to go higher here up to that overshoot, okay? I won't be surprised if it doesn't. I won't be surprised because we're in a bearish trend right now. So I'm going to be looking for buyers to try and fail on the way up to that 61.90. They might be successful, okay? Disclaimer, they might be successful. Guys, trust me, ain't nothing guaranteed in these financial markets. That's why we have a live trade room, so you don't have to do this on your own. I'll walk you through it tomorrow in real time. But let's zoom in now on that trading range. Now you can see more of what we're looking like here. So now we zoom in on that trading range now, and here we have crude oil trading in the range with a bull bias, right? We're going higher into that trading range, then we go sideways. So right now, we definitely have a bullish bias in this short-term range. We already got the bear trap. That bear trap tells me it's very, very likely here that we make a run for 664, 61 even, possibly straight up here to this 61.80 area. I can't tell you exactly how it gets there. But the bottom line though is that bear trap, okay, that fake break of that low, almost a guarantee we retest those highs now. Okay, it's one of my favorite patterns. It's a breakout trap pattern. We're bullish going into it. We go sideways. We see the range going sideways. Anybody who's taken my trial, anybody who's a member of mine knows exactly what I'm talking about, right? So trap by those lows on the way up. Again, understanding, though, we're in a long-term downtrend. We know the long-term trend is down, so buyers will be looking to buy support levels, but wise sellers will be waiting for those buyers to fail to sell into those stop losses following that long-term trend. So again, bulls, breakout pullback. up to that resistance. This is why I wanted to show you this secondary chart, because you take that trading range, you project it up, you project it up, you project it down, you project it down, and now you've got some great key levels of resistance overhead and support below. Then you throw in the ABCD, measured move, puts us up around 62.25, and wait. There's that overshoot resistance. Remember that off the longer term chart? Remember 61.90, 61, tough to tell right now where it's going to be, but that's going to be the same area right up in here, right? Right up in there. So that's going to be where you're going to be looking for those. Again, if we end up going higher, and I think we will, right? I mean, obviously, don't trust my gut instinct. It's not a trading strategy. I trust my plan, not my gut. But again, buyers, breakout, just be careful. You got that 60.94. It's a major swing. Look left here on the chart, and it's a major swing looking left here. It's a little bit tough to see it, though, but it's right there, right? Major swing to the left-hand side. So we know, we'll call it 61. There's going to be some resistance there. So again, I'll be looking for, as a bear, I'll be looking for price to go up, pull back, try, and fail back into that range, right? Come down, buyers try and fail. Again, I'm looking for areas of support where the bulls try and the bulls fail. I'll gladly let this move go if I can't get a handle on it, because I've got this support, this resistance level at 60.94. This is going to be a really difficult place to get in long here because you've got that range high overhead. So I'll be looking for buyers to fail. If I miss it, I miss it. At least I'm doing it the safe and conservative way. And then again, if we get up here, again, buyers try and fail. We'll look for additional selling opportunities there as well. The great money here is going to come if we can get this price to come down, test the support level, buyers come in and they fail, because that's going to give us a little more oomph to the downside. And then to the downside, you got targets waiting at these range expansion levels as support. If you're a bull, you're looking for breakout pullback above 94. If you're a bull, you're looking for buying opportunities at range lows, buying opportunities at support levels, buying opportunities at range expansion support. So if you're a bull, I'll get you covered here. No big deal there. I'm going to be using the same levels as the bulls, but I'll be waiting for those bulls to fail so I can try to find an opportunity to follow this long-term trend. All right, guys? Now, I know I covered a lot today. I know when you're a brand new trader, we assume this has to be very complicated. It has to be very difficult to do on your own. That's why I'm here to remind you, you might be here watching this video by yourself right now, but you're never alone in your trading career. Guys and gals, I've been running a trade room for almost 12 years here at School of Trade. School of Trade is the longest running trading education community on the interwebs. I'll tell you right now, you're not going to find anybody that does it better than we do. We've been doing it longer than anybody else. We get a great free trial, beginner, intermediate, and advanced, and I always have someone standing by 24/7 to give you guys and gals information when you need it. Join the trial, learn more about our 3 levels of membership. Give us a call here in the office. I live in Los Angeles. If you're a local, right, let's meet up, grab a cup of coffee. We'll talk about your trading career. I love working with new traders because I get a chance to give you the same career opportunities that I had to claw my way, right, out of my 9-to-5, my 3 part-time jobs when I was a student in college to get here. All right, guys? So be well out there, be nice to each other, and be here again tomorrow. Same time, same place, 8 p.m. Eastern Time, and I open up my trade room at 8 a.m. for all you members out there. I will see you tomorrow. Viva la June, right? Welcome to June, and welcome to a brand new week. We got a big set of opportunities in front of us. I'll see you guys in the mañana. Adios, amigos. Bye for now.